Results are in and everyone's buzzing with one big question. How will it affect the Seattle housing market? It's an exciting time, but also filled with a lot of what ifs. All right, real quick, don't forget to like this video and subscribe to our channel for more great content, please. All right, let's to it. November is typically a month when the market likes to take a little breather, but this year we got a little extra twist, some higher interest rates and a healthy dose of uncertainty. But let's break down what's really going on out there. All right, look at the three main factors that tell the story of the Seattle real estate market: sales activity intensity, inventory levels, and of course, those ever watchful interest rates. And trust me, each one of these is playing its part. First, sales activity intensity. This little metric is like the pulse of the market. And right now it's holding strong at 46.4%. And what does that mean for you? Well, it means we're sitting in a very strong market zone. Almost half of all homes are going under contract within the first 30 days of listing. Homes are moving quickly, spending an average of just 29 days on the market, with 14 showings before getting snatched up. So buyers, if you're thinking you can sleep on it, think again. And sellers, this is the sweet spot where you can catch some serious buyer attention, but pricing it smartly is still your best bet. Talk about inventory, where we dropped down to 2.1 months of supply, which is even tighter than October's 2.3 months of supply. For those wondering if that's a lot or a little, it's definitely on the low side. A balanced market would be around 4 to 5 months of inventory. So what we've got now leans heavily towards the seller's advantage. So for buyers, it means fewer choices and more competition when you do find that dream home. And for sellers, well, it's your chance to shine, but don't get too comfy, because competitive pricing and great staging are still going to be your ticket to standing out. A real elephant in the room: interest rates. They've nudged up to 6.8% or so, up from about 6.12 in October. The Fed did just cut their interest rate by 0.25 basis points, and we saw mortgage rates dip a bit today. We'll see how that plays out. But that increase can put up a bit of a squeeze on purchasing power, especially for first-time buyers. So if you're looking to buy, make sure you know your numbers and get pre-approved so you're not caught off guard. And sellers, here's a little tip: consider offering rate concessions to make your property more appealing. It's a simple move that can make a big difference to buyers facing those higher costs. Seattle's housing market isn't showing signs of taking a back seat, even with the usual seasonal slowdown. High demand is still keeping things moving. And with the election results adding a dash of unpredictability, folks are keeping a close eye on what policies might come into play. More rate hikes, more listings, we'll have to wait and see. So what does this all mean for buyers and sellers? Well, if you're a seller, this is your window. Get that home on the market while buyer interest is still strong, and make sure your listing stands out with smart staging and competitive pricing. And if you're a buyer, stay sharp. Know your budget. Get that pre-approval letter, and don't hesitate to negotiate for concessions to help with financing costs. Whether now is the right time to buy or sell, well, keep in mind that Seattle's real estate market is still moving. Even with higher interest rates and low inventory, the market may be shifting, but the demand is still there. So if you're ready, be ready to act. And if you're still unsure, keep watching the market. It's going to be an interesting end to the year. Thank you for watching.